Hello all. Hope you're having a great afternoon. Remember that we have a test this Friday, so I just wanted to go over a few things that you'll need to know for the test. Remember in chapter 4 right here, I've got it all laid out right there. We talk about the 4-step closing process. Remember that? And how we close the books at the end of a period. And remember, our 4-step closing process is this. First, you're going to close all the income statement credit balances. Well, how do we do that? Well, on the income statement has a credit balance. It's a revenue, right? And so how do we close them? We debit them. So remember, your journal entry is going to look something like this, right? You're going to debit your revenue or fees earned, whatever it's called, and you're going to credit that income summary. Remember, income summary is that temporary account that we create just for this closing process, right? So whatever amounts you have, you're going to put right there. And then what do? Then we close all income statement debit balances. Well, what is that? Those are the expenses, right? If they're debits and we want them to get to zero, what do we do to those? Well, in that case, we're going to debit income summary and credit all those expenses individually, right? We're going to credit those individually, okay, to get all those expenses to zero, and then you're going to put that to income summary. Then we're going to close our income summary account. How do we do that? Remember, you have to find the balance in income summary. Oops, I don't want that to be underlined. You have to find the balance in income summary with a T account, right? You should have a credit balance because your revenue should be more than your expenses, so hopefully you have a credit balance. And so what are you going to do to that? You're going to debit income summary, right, to get it to zero. Still with the underline, not sure why, but we're going to debit income summary, okay, and then what? Then you're going to credit your equity, right? Your equity account. We're going to increase that equity by your income. That's basically what you're doing here. And then what do? Then you close your withdrawal accounts to equity. Remember that? Sometimes you have a withdrawal account, sometimes you do not. The withdrawals, remember, normally carry a debit balance because they are a contra asset account. So what are we going to do? We're going to debit equity because we're decreasing equity by those withdrawals, and we're going to credit our withdrawals, right? So that's our 4-step closing process. And then what about a post-closing trial balance? Balance of these accounts that you just closed should be what? Zero. They should be zero after closing. So that's chapter 4. Then what are we doing? In chapter 5, we move from selling services to selling inventory. Remember, inventory is an asset on the balance sheet when it's purchased. So when you purchase it, it's going to look like this. You're going to debit inventory for some amount. And you're going to credit either what? Either cash, if you paid cash, or accounts payable if you bought on credit, right? Not both, one or the other, okay? So remember, when inventory is sold and taken off the balance sheet, inventory is credited and we move it to an expense through cost of goods sold. For sales of inventory, you always make 2 journal entries, right, for sales. One to record the sale and one to record the cost of goods sold. What does that look like? Okay, for your sales, you're going to have what? You're going to have to record that sales. So you're either going to have accounts receivable. Let's say it's on credit. And you're going to have sales. You're also going to have cost of goods sold and inventory, right? Remember, I gotta fix that. Remember that this entry is for the sales price, and this entry is for the cost. You'll be given 2 numbers. You can't do this without getting 2 numbers. Oh, there you go. You can't do it without getting 2 numbers, okay? And so you got to make sure that when you're going through this, you look and say, am I the purchaser or am I the seller? Because we have to do it from both sides, right? When you're recording the purchase of the transaction, all discounts, returns, and allowances are recorded through inventory. Remember, we run everything through inventory. If you're the seller, you're going to have a sales discount or a sales returns and allowances accounts that you're going to deal with. Remember, those are contra sale accounts, so you're going to debit them. Okay? But that's chapter 5. The big thing about chapter 5 is we got to figure out, what are we? Are we the buyer or are we the seller? Make sure you get that right. And then in chapter 6, we're looking at figuring out if we have our cost of goods sold, right? Cost of goods sold, or ending inventory. Okay, you got to figure out which one it's asking for. Check and see which one it's asking for, because sometimes it asks for cost of goods sold, sometimes it asks for ending inventory. Make sure you're finding the right thing. Cost of goods sold is what you sold. Ending inventory is the number of units you have left. And look, is it asking you to do it FIFO, LIFO, specific identification, or weighted average? I posted videos on all 4 of these methods in our Blackboard class. I've actually posted 2, one done by somebody else and one done by me. So look at those to make sure you know how to do those calculations, okay? So 2 things you got to look at when you're doing these problems. 1, what method are we using? FIFO, LIFO, specific identification, or weighted average. 2, are they asking for cost of goods sold, what I sold, or ending inventory, what I have left? And remember that your beginning inventory plus purchases, equals your cost of goods available for sale, which means what you have on hand plus what you bought is what you can sell, right? That's your goods available for sale. Now, your cost of goods available for sale, beginning, minus ending inventory. That means what you still have on hand. You still have on hand. Okay, cost of goods minus ending inventory, that's what those parentheses mean, is minus, equals cost of goods sold, right? Remember that, that's a good way to check your figures, okay? Your beginning inventory plus your purchases equals cost of goods available for sale minus ending inventory is cost of goods sold, because that can help you figure out what the ending inventory number should be or what your cost of goods sold number should be, okay? That's all just math. Remember that here we're looking for our, not what we sold it for, but our actual cost, okay? You got to look at your cost figures on that. So here's just a few things that you need to look at. Let me know if you have any questions on any of this, okay? Be ready for your test. Remember that it's open Friday from 7 a.m. to 7 p.m. You have 90 minutes to take it once you start, which means you have to start by 5:30 to get full 90 minutes. It will automatically close at 7 o'clock. So make sure that you make time to take this test. You don't want to miss these valuable points. So please let me know. Study in advance. Let me know if you have any questions, and I'll be looking forward to talking to you soon.